This is the briefing for Friday, February 15th. Interesting close to the markets this week. I really would have thought we would have seen much more downside action, especially going into today's close, mainly because the environment for stocks based on what's happening in the Ukraine really is probably more negative than it is positive. And basically, with the markets being closed on Monday for President's Day, I really felt like we'd see much more of a thrust to the downside. This is the spiders over here, and this is the Qs here for the Nasdaq. Once we broke through in yesterday's trading, we broke through this 444 level in the spiders. It was a pretty much a clear signal that to get short, and I did, and I held that short overnight last night, and you can see this move that we had to the downside. A little bit of a pause right here at the open in today's trading, but that was quickly retraced, and then of course we had another move to the downside, coming in right into this low, coming in right about let's see, this is about the 437, call it 438 area. Now, I really had a hard time with this short in today's trading, and the main reason is because if you look at this move here and you look what happened with volume, this was volume at the close yesterday, which was skewed, and had volume skewed today. Today was option expiration day for monthly option expirations. But look at what's happening with volume. Volume was just really not increasing on this move to the downside, which told me that sellers were just not aggressively coming into this market and dumping their shares in fear of what might happen over the weekend and the market not being open until Tuesday. The other thing that was happening, which gave me a little bit of heartburn in holding this short position, was breadth, and you can see the strengthening of the market in today's trading. So you can see the negative breadth that we were at yesterday, and then of course lower lows and positive breadth in today's trading, and that led to this rebound, of course, going into the close, really testing this 436, 437 area, and then a little bit of a sell-off going into the close today. Now, the interesting thing that happened here also, which gives me a little bit of optimism for Tuesday's trading to the long side. And that I should qualify that with the fact that I'm optimistic unless there is just a real disaster in the Ukraine with Russia that would bring fear into the market, and then we'd see, of course, another really good thrust to the downside. The fact that we had this divergence was pretty significant, and we had the same thing in the Nasdaq. You can see this with the Qs over here, the divergence that occurred. Same thing was happening in the Nasdaq with volume falling off. But the positive thing was, if you look at this move here, you can see that volume was beginning to increase going into this high. Now, we typically will get volume spikes at the open or at the close, mostly at the close, as traders just square up their positions. But the market was strengthening from what I can see going into today's close, which suggests that if there were not a potential geopolitical event facing us, that the higher probability we would be seeing higher prices in Tuesday's trading. Now, if we look at where we are with the S&Ps, this is the spiders once again from a longer term perspective. This is a 120-minute chart. We have this rotation here, another rotation here, and basically what it appears we're completing is if you put these two together, you have a longer term counter trend rotation that appears to be happening with important support coming in at 425. Now, in last night's briefing, I said that I talked with somebody yesterday, and they asked me what I really felt the market was going to do, and I said, well, if I was a betting man, I would think that the market was going to go lower, but I really don't like to bet. I like to have a probability assessment of one event occurring over another, and then take the higher probability assessment. Really, it's been pretty difficult to come up with a higher probability assessment with all the chop that we've been in the indices for quite some time, going back all the way to the January 24th lows. Now, there still is a possibility that we're going to see these this January 24th low tested and potentially taken out. But as of today's close, the market was strengthening, and that suggests that if that follows through in Tuesday's trading, that we're going to see some upside. Upside resistance in the spiders comes in right around the 445 level. Looking at the NASDAQ, you can see the rotation that occurred here, then a breakout, rotation again, a rotation back down, up, and then back down again. Greater degree time and price rotation. We're at this 340 level. Support in the Qs is at 340. Resistance is going to come in about the 354 level. So watch those areas very carefully. And you can see right through here that volume was falling off. You can see the divergence in market breadth in the NASDAQ as well. In the Russell, about the same thing as the others. Now the Russell appears to be holding up stronger than the other indices. And I want to go back here one more time just so you can get the picture of this. This is the S&Ps or the spiders getting pretty close to testing 425. This is the NASDAQ testing 340. These are comparable support levels. The Russell not even close, about halfway down to this 190 level. So the Russell is showing some strength, which is very interesting to see, especially in what we're seeing now, because typically the Russell will be a more speculative index, and you'd think that it would have more of more selling that would hit it as opposed to the other indices, because typically the Russell, along with the transports, will signal turn to the downside prior to the S&Ps and the Dow and or the NASDAQ. Taking a quick look here at what's happening with the Dow, you can see Dow is getting really close to testing this. This is about the 33,700 level. That's really important support. This is the January 24th lows. And then look at the transports. Transports really just in a downtrend right now as well. So down the transports did not confirm this move in the Dow Industrials, and I think I covered that in one of the briefings. So that did suggest that the higher probabilities we were going to see more downside work. Now, based on this, if the Russell were to break this 199 level, then I would think that it will test the 190 level. And then, of course, that would open the possibility for either the Russell to catch up with the other indices and test or take out the January 24th lows, or we could be seeing just another rotation back up again. So that strengthening we saw in today's trading was very, very interesting, just very important to keep in mind for Tuesday's trading. In terms of overbought and oversold, we are really not oversold at this point in time. NASDAQ is slightly oversold at this point in time, but the NASDAQ has had more downside. It is testing its lower support level, which is extremely important right now. And then, of course, volume. You can see volume has been falling off. This was the January 24th low. And then ever since then, as we've had this rotation back up, volume has really just completely fallen off, except going into today's close, which is very interesting. And you can see that right through here. This is the move down into the January 24th low. Look at what happened with volume on this rotation back up. This is why I could not really become bullish on this move, because of what was happening with volume. It was not attracting new buyers to the market. In fact, they were waning instead of coming in. And then, of course, new highs minus new lows was still signaling a very weak market. And then, of course, now we're getting ready to test this 425, 426 level in the spiders. So Tuesday's trading should be very interesting. How that opens and how we end up the day on Tuesday is going to be very, very important, mainly due to the geopolitical events that can change the perception of value on the part of traders and investors. So it's going to be really anybody's guess as to what happens, but I have to give a lot of credence if there is not a geopolitical event, that we did have a strengthening in the internals going into the low today, and that could be a pretty good signal for what might come if we do not have a geopolitical event. Have a great weekend.